So, payroll tax, just to break this down a little bit further in terms of payroll tax and the tax implications and potential savings depending on the nature of the business structure. If you're a sole proprietor LLC, you're taxed the same exact way. Remember, I tell you there's two layers of taxes: self-employment tax and income tax. If you have annual revenue of 100K, you have business expenses of 30K, you're making 70K profit, you have to pay payroll taxes on that of almost $10,000. If you are an S corporation, so you either started off as an S corporation or you started off as an LLC and then filed an election to be treated as an S corporation. Same scenario with revenue and expenses, but you pay yourself now a W 2 wage. As a sole proprietor LLC, you're not an employee, you're an owner. So you take an owner's draw, and the money that you take out as an owner's draw to pay yourself is not a deduction. But as an S corporation, you're an employee now and you pay yourself a wage. The good thing about that is that wage is now a deduction. So you have 100K in revenue, 30K in other expenses. Now you get a deduction of 40K for your salary, and you only pay income tax relative to the business on 40, which is 30. Also, you get a savings on your FICA, on your self-employment tax, because you're only paying self-employment tax or these FICA and FUTA tax on that 40K. You can extract the other 30,000 of that 70,000 without paying payroll tax on it. And the payroll tax savings alone is about $3,300 just with payroll tax, not counting the other layers of taxes. So that's one of the reasons why it may be tax advantageous when you reach a net income level or threshold to file an election to be treated as an S corporation, because S corporations tend to save on taxes, or more tax advantageous for the S corporation owner. This is the income tax bracket for 2023. So say that $70,000 business owner that had net income of 70,000, if they're a single person, they fall in a 22% tax bracket. If they're married filing joint, they fall in the 12% tax bracket. If you're married filing separately, the IRS tends to be a bit punitive and maybe kind of really put you in a single person's scenario as it regards to taxes. Also, head of household, I would think that they'd give them a little more break here, but you'd still be in the 22% um, tax bracket. So if you're a person that's making 70, 100,000, I mean, once you add in self-employment tax of 15.3%, income tax of 22% or 12%, if you're in a state that has tax that may be 5% or so, you can be walking away paying for upwards to give her on taxes. But then if you're an S corporation, you can save a bit on that.